Welcome to Financial Market Insights for Traders. I'm Sophia, and today we're pulling back the curtain on a force that keeps on rewriting the rules of market volatility, President Donald J. Trump. He's back in the White House in 2025, and true to form, he's governing the same way he did before, with sudden shifts, off-script statements, and policy reversals that can wipe billions off the market or add them back, sometimes within hours. And whether you love him, loathe him, or just trade him, there's one thing we can all agree on. Trump moves markets. Dramatically. Often. And if you're not prepared for that kind of volatility, it can catch you off guard. But for the sharp traders out there, it's a gold mine of short-term opportunity if you know how to read the signs. So today we're diving into Trump's signature policy flip-flops, how they're impacting the financial landscape in 2025, and how traders, retail and institutional alike, are positioning themselves to win in the chaos. Let's rewind just a bit. Trump's presidency from 2017 to 2021 gave us the blueprint. Remember the U.S. China trade war? The Fed tweet storms? The sudden airstrikes and then peace talks with Iran? Back then, even his late-night tweets could send the Dow or Nasdaq swinging 2% in either direction. Now, in 2025, the stakes are even higher, and the playbook's barely changed. Let's look at some of the most impactful policy reversals this year that have already left their mark on the markets. First, the NATO controversy. Back in February, President Trump and Vice President J.D. Vance held what was supposed to be a diplomatic sit-down with Ukrainian President Volodymyr Zelensky. Instead, it turned into an Oval Office confrontation. Trump told reporters afterwards that NATO countries better pay their fair share or they're on their own. Markets didn't like that. Defense stocks like Lockheed Martin, Raytheon, and Northrop Grumman sank in pre-market hours. European indices opened weaker. The euro dropped. But a week later, during a televised town hall, Trump shifted gears again, saying, quote, "America will always lead. But it's time others step up." Defense stocks bounced. Traders who bought the dip on Raytheon, up 7% by the following Tuesday. Then there's the China tariff U-turn. In March, the Trump administration announced sweeping new tariffs on Chinese artificial intelligence and semiconductor imports, framing it as a national security issue. That hit tech hard. Nvidia, AMD, Qualcomm, down 4 to 6% in a day. But here's where the reversal came. By mid-April, amid mounting pressure from U.S. manufacturers and Wall Street, Treasury Secretary Byron Donalds began walking it back. He told CNBC that all options are on the table, including a tiered tariff approach tied to progress in trade talks. That single statement pushed tech stocks back into green territory. Traders who shorted the chipmakers on the initial tariff news, then went long the rebound, they caught both ends. And yes, Trump's taken on crypto again. Early May, the White House floats new restrictions on offshore crypto exchanges and talks of a possible capital gains surtax on digital asset profits. Bitcoin tanks, dragging Ethereum and Solana with it. Crypto Twitter loses its mind. But wait, just a week later, Trump posts on Truth Social, quote, "We must remain competitive. Crypto is innovation, not the enemy." Bitcoin jumps nearly 9% in 24 hours. Ethereum follows. Solana goes vertical. What happened? Someone realized crypto voters and crypto donors are real. And this reversal? It lit up the altcoin market like it was 2021 all over again. So what's the takeaway? When it comes to trading Trump-era volatility, the smart money isn't guessing, it's watching closely. Because whether it's tariffs, defense, crypto, or central banks, the president's words, more than formal policy, are the trigger. And the pattern is almost formulaic. Shock policy, market reaction, partial reversal, recovery. That's your cycle. So, how do traders navigate this? Let's talk strategy. First, you need to be fast, but not impulsive. That means staying glued to real-time news. Set alerts. Watch both official statements and platforms like Truth Social, because sometimes a single post is all it takes. Second, look at volatility setups. Options traders, this is where straddles and strangles thrive. Buy a call and a put before a major Trump announcement, or ahead of a known policy flashpoint and ride the swing, regardless of direction. Third, don't underestimate safe haven flows. During Trump's more aggressive moments, whether on foreign policy or trade, investors rushed to gold, U.S. treasuries, the Japanese yen, and the Swiss franc. That creates clear trading lanes for FX and commodities players. Fourth, hedge your bets. If you're long on vulnerable sectors, like semiconductors or defense, use options or inverse ETFs to protect the downside while still holding for potential reversals. And finally, this one's important. Understand the political calendar. With the Trump administration appending norms weekly, every scheduled summit, press conference, or executive order could trigger a short term swing. Build those events into your trading calendar. Let me leave you with this. Whether you support Trump or not is irrelevant in the markets. What matters is that his unpredictability isn't unpredictable anymore. It's a feature, not a bug. His policies may shift, his tone may change, but his impact on markets? That's consistent. He moves capital, he moves headlines, he moves price. And if you're a trader in 2025 trying to find an edge, that's your edge, recognizing the pattern before the rest of the market catches on. So, are you ready for the next policy pivot? Because trust me, there's another one coming, probably this week. That's it for this episode of Financial Market Insights for Traders. If you found this breakdown helpful, share it with your trading circle. And don't forget to check out crystalbellmarkets.com for the lowest fee crypto CFDs and expert trading tools. Stay sharp, stay informed, and trade smart. I'm Sophia. Until next time.